Are markets near a short-term bottom? That's coming up on 3 Minutes on Markets and Money. Last week, markets had a large sell-off here, pushing stocks down sharply into the close on Friday. Now, markets tried to stabilize a bit on Friday going into the long weekend. This morning, futures are pointing up here a bit. Dow's up about 400 points right now as I'm doing this video. And of course, the Nasdaq's up about 160. S&P's up about 45, 50 points right now. So all indexes are showing the potential for a bit of a bounce this morning. This isn't surprising because markets are very oversold. We're down into 3 standard deviations below the 50-day moving average. Of course, that moving average is declining sharply here, putting more downward pressure on stocks currently. But if we take a look at MACDs, money flows, and Williams percent R indicators, all very oversold here, and at levels normally we should start to see a bounce. Now, again, we get a bit of a bounce today. That's not surprising at all because the markets are so oversold on a short-term basis. But in order for this bottom to actually be more sustainable, we're going to need to see the MACD indicator turn back up, positive, give us a buy signal here that can suggest that we might get a longer-term rally. For the moment, though, as we take a look at the markets where we are today, after this big bout of selling last week, we had one of the largest sell programs ever on record last week. Lots of options expiration on Friday. So again, not surprising as we move into the end of the month. We're getting some portfolio window dressing and rebalancing. Pension funds, mutual funds, etc. Very underweight equities right now. So again, a bit of a rally here won't be surprising. But what we need to see here is this market break this very defined downtrend channel that we've now been in for the last couple of months. A move to the top of this channel, not surprising. That'd put the market right around 3,900 to 4,000. That would be a reasonable retracement level for this rally. I would suggest that any rally continues to be used to sell into, to reduce risk, raise cash, add a short position to your portfolio to hedge. When that changes will be a break above the 50-day that now gives you a shot back at the 200-day. If we can get that type of a breakout to the upside, which I don't suspect we'll get right now because there's so many people trapped in this downtrend of the markets over the last couple of weeks, these trap longs looking for an exit. But if we do make a break out of this downtrend and turn this MACD back to a positive signal, that might be the first indication of getting a bit more lasting bottom to the markets. Too early to tell. I would certainly not be banking on that right now in this rally, particularly with the Fed still hiking rates fairly aggressively and tightening their balance sheet. If we begin to see the Fed now beginning to shift their stance to being more dovish, that might be a while yet. As a recession is really becoming much more apparent, we might start to see this market try to bottom here, giving us a better indication that we can increase equity allocations at that point. But today's probably not that day. Today is probably a better day to use this opening rally, lift a bit of exposure into. If you've been trapped in this downtrend looking for an opportunity to sell, today, tomorrow, Thursday might be your opportunity to do that. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. We'll talk again tomorrow.